Most people think silver is boring, a slow metal, something that only moves when gold moves. But what if the biggest silver move of our lifetime doesn't start with excitement? It starts with silence. No panic, no headlines, just quiet pressure building underneath the surface. And by the time the crowd notices, the move is already gone. Right now, silver looks calm on the screen. But calm markets are often the most dangerous ones. Because calm usually means something is being absorbed. Stress, demand, shortages. And that's exactly what's happening in silver today. On USA Trending News, we look beyond prices. We look at what's changing before the price is forced to react. Before we go further, if you want clear market stories without the hype, take a second to like this video and subscribe to USA Trending News. It helps the channel grow and keeps you ahead of the curve. For decades, silver was treated as cheap and replaceable. There was always more supply, or at least that's what people believed. But silver today is not the same silver market from the past. Demand has changed, usage has changed, and most importantly, the margin for error is gone. Silver is now critical. Solar panels, electric vehicles, military systems, medical tech, AI hardware. All of them need silver, and unlike software, silver can't be updated or duplicated. Every ounce used is gone forever. Yet production is not rising. In fact, global mine supply has been flat or declining. Many silver mines are actually byproducts of other metals. That means silver supply doesn't respond to silver prices quickly. Even if prices rise, new supply doesn't magically appear. This is the foundation of the argument. Not hype, not predictions, just reality, rising demand, tight supply. And a market that is much smaller than people realize. And when a small market meets a big shift in behavior, price becomes explosive. Here's where things get interesting. For years, paper silver controlled the market. Futures contracts, ETFs, promises, claims. Most traders never wanted real metal. They just wanted exposure. But that behavior is changing. Slowly at first, now faster. Large buyers are demanding physical delivery. Not next year, not someday. Now. And when physical silver starts leaving vaults, the system feels stress. Because paper silver only works as long as people don't ask for the real thing. This is why premiums matter more than spot price. You can see a low price on the screen, but if you can't get silver at that price, the market is lying to you. And today, premiums remain high even during price drops. That's a warning sign. Another signal is inventory. Registered silver inventories have been trending lower. When inventories fall in a system built on leverage, confidence becomes fragile. All it takes is one shock, one surge in demand, one supply disruption. And shocks are everywhere. Energy costs, geopolitical tension, trade restrictions, green energy mandates, each one increases silver demand while stressing supply. It doesn't climb slowly. It stays quiet for years, then moves violently in short windows. Historically, silver spends more time doing nothing than moving. But when it moves, it overcorrects. In 1980, silver didn't gently rise, it exploded. In 2011, it ran nearly 5 times in a short period. And both times, most people missed it because they didn't believe it until it was already happening. Today's setup is tighter than both periods. More industrial demand, less available supply, more debt, less trust. Another factor is capital flow. It doesn't take trillions of dollars to move silver. It takes a fraction of that. A small rotation out of bonds, a hedge against currency risk, a shift in institutional thinking. Silver is the smaller door. When too many people try to fit through it at once, price has only one direction to go. $300 is not a promise. It's a possibility created by imbalance. And markets don't care what feels reasonable. They care about pressure. There's also psychology. Most investors are positioned wrong. They're overweight paper assets and underweight real assets. That works until confidence breaks. Debt levels are rising faster than growth. Interest costs are becoming unmanageable. Governments are trapped between inflation and instability. These are not short-term problems. They're structural. In times like this, trust becomes the most valuable asset. And trust is moving away from paper promises toward physical reality. Silver benefits from this shift in a unique way. It's affordable. It's liquid. And it's essential. That combination makes it explosive when sentiment turns. Industrial users don't speculate. They secure supply. When they panic, they don't sell. They buy more. That creates competition between investors and industry. And industry usually wins. This is why silver shortages matter more than price predictions. Once shortages appear, price follows. Always. The market can ignore this for a while, but not forever. So what does this mean for you? It means the silver story is not about timing the exact top or bottom. It's about understanding the direction before the crowd. If silver reaches $300 by mid-2026, it won't be because everyone agreed. It will be because reality forced it there. Most people will only notice when the headlines turn loud, when prices gap higher, when supply disappears. And by then, the easy gains are gone. At USA Trending News, our job is not to tell you what to buy. It's to help you see what's changing before it becomes obvious. Now I want your honest opinion. Do you think silver is being suppressed, or do you believe the breakout will shock the market? Write your thoughts in the comments. We read them. And if this video made you think differently about silver, share it with someone who still thinks silver doesn't matter. That one share helps more than you know. Stay informed, stay ahead. And I'll see you next time on USA Trending News.